At a local level, I want to update you on the housing market and the effect of the Silicon Valley Bank closure. What we know, Silicon Valley Bank was one of the largest banks, actually 16th largest in the US. And it is the second biggest bank failure in history, just slightly smaller than Washington Mutual back in 2008. So even though Silicon Valley Bank had $12 billion in assets, and we're talking up their success over the last few months, they were actually $15 billion underwater in unrealized assets. So how did that happen? Well, they did not have to report these $15 billion in unrealized assets due to some rules from 2008 about buying mortgage-backed security. And the biggest issue? They did not have a chief risk officer for over 8 months, from April 2022 on. That is the same time that the Federal Reserve raised rates drastically over 400 basis points. One of the worst times in history to not have somebody in the bank managing your risk. Silicon Valley Bank should have been moving their assets to minimize the risk of these 2% mortgage-backed securities, but there was nobody there to handle that for them. Now, other banks are unlikely to run into the same issue because Silicon Valley Bank had a money management problem that led to liquidity and a capital problem. So how is this affecting the local Bay Area companies right now? Well, Silicon Valley Bank is the bank of many startups and Silicon Valley-based companies. Companies did have their money locked up for several days until the government stepped in on Monday, March 13th, and got involved to allow members of Silicon Valley Bank to access their money. Now, the Silicon Valley Bank closure has affected the stock values of other banks due to the fear in the market, but many banks are still doing fine since they were managing their risk and moving investments over the last several months like they should have been. Many of these Silicon Valley companies moved their money to Chase. Also, Bank of America, Wells Fargo, and plenty of other banks that are dominant here in the area, including many credit unions, are all functioning well. I work a lot with Golden One Credit Union for buyers getting home loans, and Golden One sent out a note about Silicon Valley Bank to assure their members that they own the bank and they don't have the pressure from investors and stock owners to make the bank books look better than they really are, like Silicon Valley Bank did. So for homeowners, there are plenty of banks out there still doing well, and buyers today are using smaller credit unions, Bank of America, and Wells Fargo to make the jumbo loan purchases here in San Jose. Now, what about the local San Jose housing market? Demand in the San Jose area is still really good, with multiple offers on many properties when priced right for their condition. Now, there have been two big concerns about demand. The first is these really expensive high interest rates, and the second are the layoffs that have been happening in Silicon Valley. For example, Meta, Twitter, and other Silicon Valley companies have had some decent-sized layoffs. But there are other companies that are still hiring, and unemployment in Santa Clara County still remains really low. The State Employment Development Department states that South Bay jobs have increased in the last couple months. It appears the companies that rapidly hired over the last several years, such as Meta, are the ones most susceptible to the recent layoff. But some Silicon Valley companies like Apple have had no layoffs at all. It appears other Silicon Valley companies are absorbing the workforce that got laid off. Unemployment is still very low at 2.1% for Santa Clara County. Now, regarding demand number two concern, interest rates, well, it is affecting the demand. That is true. Demand is lower as a result because buyers can't afford as much with the 5 to 6% interest rates at our high average San Jose single-family home price of $1.43 million. But inventory is also so much lower. So we are seeing the same story of the San Jose real estate market. Fast-moving and pretty competitive. Today, again, about 1 month of inventory is all there is, and properties priced correctly are receiving multiple offers. I have a buyer making an offer this week where there is definitely competition on the property. So all that, we are seeing a lower volume of sales than we are last year. There is still a good supply and demand balance. So stay tuned for future videos where we continue to monitor the local housing market, including supply, demand, and unemployment rates. See the latest update from the San Jose closed sales at the link below, which includes charts of the supply and demand through time. We even share the Santa Clara County data all the way back to the year 2000, before Silicon Valley became the worldwide tech headquarters that it is today. It provides a lot of great perspective, and you can look at how 2007, 2008 is very different than the market today. Before you go, I get a lot of requests asking how to keep up to date on our content and local events. So I recommend you sign up for our education-focused newsletter. You can go to homeownerexperience.com/newsletter. I'll put the link below. In the newsletter, you will get educational videos, including professional insight on the San Jose housing market monthly, interviews with experts to educate homeowners, and get invited to our local events. Our mission is to revolutionize the real estate experience for you through our focus on education, transparency, and unwavering commitment to your success. And our newsletter is the source to tie all that content together for you. Sign up, and if you don't like it, no worries, unsubscribe anytime. Thank you for watching. Please like or comment below.